We live in a world of growing social cleavages, shifting geopolitical sands and binary opinion, fed by a culture with few positive visions of the future. One issue looms larger than most.
Climate change.
Climate crisis.
Climate change.
Climate change. Climate change.
This week, the world's leaders descend on Glasgow to try and tackle this issue. But away from politics, investors have their own decisions to make. Here's 3 things we think you'll need to consider, because as Kermit says,
it's not easy being green, having to spend each day.
Before the pandemic hit, lots of people were worrying if inflation would ever return. Fed Chair Jerome Powell even described low inflation as
It's a major challenge. It's one of the major challenges of our time.
Now, people are worried about inflation again. After the disaster of COVID-19 came stasis, recovery, and then, just as fast, dislocation and supply chain turmoil. That's what happens with crises. Shock begets shock. Climate change could push up inflation in 2 different ways. First, as we bid up the materials needed for the energy transition and underestimate our reliance on fossil fuels. And second, as we deal with the disruption and chaos we potentially face.
The disruptive impacts from climate change itself, almost certainly inflationary, and investing as much as we need to rapidly rebuild a low carbon economy will also likely have inflationary consequences for some materials, but it will be deflationary for others. I mean, weaning ourselves off fossil fuels, in the end of the day is going to be very negative for the pricing of those fossil fuels when we successfully make that transition.
A recent advertising campaign from Swiss bank UBS shows parents holding their children asking questions like, can sustainable investing protect their future? The answers aren't easy. Economists at asset manager Schroders have calculated that over the next 30 years, returns from cash, bonds and equities are all likely to be lower because of climate change. But it is the stress on our real economy which could be the bigger danger. Here it is our food system which is of greatest concern, as increased droughts and floods hit agricultural yields and increase soil erosion.
Yeah, particularly on the food side, I don't think you can overestimate the scale of the challenge we're facing. Feeding a growing population, demand for protein is rising even faster than demand for calories, and doing all of this in a world where extreme weather events, as you say, are becoming more frequent. In that business as usual scenario, agriculture would use up the whole carbon budget by 2050.
At some point, the world will have to begin to tax carbon. The idea is to incentivise switches to less carbon-intensive economic activity, acting as a behavioural nudge to shift supply and demand patterns. Unfortunately for investors, pricing carbon will have huge impacts on the earnings of companies. One estimate suggests half of listed global companies would face a rise or fall of more than 20% in earnings if carbon prices rose to $100 a tonne. But the process is already beginning. Sweden, for instance, already has a carbon tax in place, and the number of companies independently pricing carbon is growing year on year. Coming up with a global plan is the real challenge, and one that world leaders will have to tackle at events like COP26.
I'm a big fan of putting the price of carbon not at the point of use, but at the point of production, put at the wellhead or the minehead. Suppliers have to acquire a permit to sell. Those kinds of policy interventions would be welcome. Do I have much expectation for it at the Glasgow COP? Not especially.
For investors, the impacts of climate change require a nimble approach to regulation, a reappraisal of long-term asset returns, and an appetite to back the world-changing innovation needed to get us through this huge challenge. It's not easy being green, but for forward-thinking investors, there really is no other choice.